So the government's policy, the change on superannuation, comes at the same time they've released the tax expenditures and insights statement, which, as you touched on earlier, shows the magnitude of the tax concessions that the government has to deliver each year.
Yes, this release today of the tax expenditure statement, the context of this superannuation tax debate, is a bit like a Treasury and Treasurer tax us more wish list. Overall superannuation tax concessions come to $50 billion, but some of this is a bit like saying not increasing our income tax is foregone tax revenue. On this table in this statement is even taxing the family home, and the government says they are losing $24 billion from not doing that, as if that's ever going to be on the table. Not putting the GST or food or education, the deal that John Howard did with the former Democrats leader Meg Lees in the year 2000, is worth $13.8 billion a year. $5.8 billion for not taxing education, $8 billion on food. No income tax on NDIS payments, worth $8 billion. Capital gains tax discounts for individuals and trusts, $23 billion. The deduction for the cost of managing tax affairs, $1.6 billion. And work-related expenses, $10 billion. But I do find this a bit of a bizarre exercise. It's required by the Charter of Budget Honesty, but Jim Chalmers has elected to expand the list. No mention in there of what difference measures on franking credits would make. For instance, the shortened policy was worth $11.4 billion over 4 years.